everyone, Donna here from Mortgage-Powered Financial Group, and welcome back to the Mortgage Sweet Spot Lender Edition. This series is where we sit down with our lending partners to break down real policy, real files, and conversations brokers don't always get to hear. Every lender has their strengths, their quirks, and their behind-the-scenes magic. Better deals, better relationships, and better results. Let's jump in. I'm so excited to have you here, Reaza.
Yeah, I'm excited to be here. Thank you.
How was your week?
The week has been good. I was off for a little while, so it's actually a short week.
Golfing.
I was golfing.
In warm weather.
In warm weather, yes.
You brought back the weather, but you forgot the sun.
I brought back the sun for one day, and then it snowed the next day that I was back.
I haven't seen snow this week, but the rain could go away.
Yeah, it's an interesting week so far.
Terrible, right?
Yeah, you know what? It was a good time away, so it's always nice
Amazing.
to
I love that
get
for
a bit
you.
of a break, right? So
I love that for you. I'm going to Florida in March.
Are you?
Yeah, so I'm
nice.
Counting down the days.
Well, we're always running pretty quick, right? In what we do, so.
That's fair. For those of us who haven't met you, Who are you?
Well, my name's Reaza Ali. What do I do? I'm the National Broker Relations Manager at Neighbourhood Holdings.
But wait, last week you were with Fizgard. What happened?
Yeah, so a little while ago, I was with Fizgard last October.
It seems like yesterday.
I know, it's you know what, when we think about this, it hasn't been that long.
No.
It's only been 3 months, approximately. So last October 17th to be exact, I went from being MPC conference. I went from being a Fizgard employee to a neighborhood employee.
How's the transition been for you?
It's been good.
Yeah.
We did a lot of groundwork leading up to the actual sale.
So you knew it was happening and you didn't share it with your closest friends?
Lip sealed.
Fair enough.
Yeah. Nothing could get out.
So is Neighbourhood large? Like, what is...
Yeah, it's when you look at both companies, we're fairly similar in size. So when that transaction happened, we literally doubled the company in both staffing and capital.
So what does that look like? How much do you have under management?
Under management now is roughly 800 million.
That's incredible.
So yeah, it's a great size to be at. There's challenges, right, that come with that. Getting money out of that size, but it gives us a lot of flexibility for sure.
I assume that the merger allowed for additional products that you might not have had with Fizgard?
Exactly.
So what's changed then for you?
Both sides,
yeah.
Which was, when you look at the coming together of these companies, a lot of strengths on both sides. And if I talk to what was good from the Fizgard piece in relation to neighborhood, we can now say we're faster at what we do, better price points, more options, I would say. And from the neighborhood side, higher loan to value, wider lending area. Even with Fizgard, I would say wider lending area as well, because we're coast to coast.
Oh, so the whole country? We're
coast to coast now. So with the exception of a couple, Manitoba, we're still waiting for licensing to be cleared. And then in the East Coast, we're Nova Scotia only.
Okay.
Yeah. So the rest of the provinces were open and running.
And where do you serve? Just Ontario?
Myself, primarily Ontario. My focus previously was national, across 5 provinces going west, but Ontario and Nova Scotia. Okay.
So that's a whole lot of brokers that you need to get in front of.
A lot of brokers.
You must be busy.
It's every day brings something new, which is nice.
That's cool.
Yeah. You're never bored.
Fair enough. What's one thing you wish brokers understood better about your lending process?
One of the things, and you mentioned it, every lender is very different. Some lenders will ask for a lot of documentation. Their risk appetites are very different. Our approach is primarily a stated income approach. So as long as it's reasonably stated on the application for what they do, the industry as a whole, we're likely to proceed without income documentation.
So nothing?
We mitigate all of that ahead of time. We look at a number of things. We look at credit score, their behaviors there, the loan to value, the risk factors there, as well as property and location. So as long as we have a comfort level around that, we're not asking for income documentation.
So you're not asking for T4s, bank statements, the firstborn child,
that's correct.
Notice of assessments, nothing?
And that's generally speaking, right? There may be scenarios where we come across and we want to mitigate some risk there. We may ask, but generally speaking, no.
I always say one of the things FSRA is big on right now is exit strategy.
Absolutely.
And one of the things that I say a lot of is just because I can do something doesn't mean that I should. Mm-hmm. How do you address the exit strategy as a lender when you're not seeing income docs? How do you know that we can take somebody from Neighbourhood to a traditional lender? So
again, it comes down to the preparation of the application, the presentation to us. And really understanding the partnerships that we have with our brokers that take us seriously as a partnership, and their business as well. They want to do the best for their client. But when you talk exit strategies, private lending and MIC lending in general is really supposed to be short term.
Yes.
And we had defined that previously as 6 months or a year. In the environment that we're in today, I would expand on that and say maybe 18 months to 24 months is more realistic. But we look at the overall picture and is this reasonable? So someone might come to us and say, the plan is to sell in 6 months and or refinance out because the equity is going to grow. Well, and we know right now in today's environment that may not be true.
100%.
And so we have to take that in consideration. How realistic is that? And on top of that, we do offer renewals. So if the exit does not translate, we're there to help. So
will you commit on a longer term up front, or is
we
it?
Can.
Yeah.
Yeah. So we offer 1 year or 2 year terms.
That's great.
It does help those situations that require a 2 year term, but then knowing that maybe they will have to renew and they can renew in again.
So we have a philosophy at MPFG where we take all docs up front. So even if my lender isn't asking for income verification, we know that our clients can get out because we've seen it.
Yeah.
Do you think that that's happening everywhere, or no? It needs to.
No, it absolutely needs to. And I have a great example this week. A good broker friend of mine who has a file in with us right now. He says to me yesterday, Reaza, this was such an easy process, and he operates like yourself. Docs up front, very detailed notes to the underwriter, a summary. And I said to him, I said, look, stick with that practice. That's your best practice. You understand. It actually helps you understand how you're going to handle that client ultimately for an exit strategy.
100%.
Right. And you get to see the bigger picture versus not collecting anything. Now, he had everything. He had more than what we needed, but the underwriter said, we're good to go at this point with what we have.
Our job is to find a solution today, but it's to make sure when we're dealing with the private spaces, getting them somewhere else. And
absolutely.
I think that any broker in the space that's not collecting documents is going to have a problem, because when a file like this is going to go south, it's not going to go south at closing. It's going to go south at renewal.
That's right.
And the client is always going to come back and say, but I told my broker that. So when FSRA gets involved, FSRA's big thing this year, or should be, is suitability. How do you know that this was suitable? If you didn't take income docs, especially when you're talking about a no payment mortgage, do you offer no payment mortgages?
Not generally speaking. We can handle that. We don't administer it. Okay. So the client gets that balance check, and we have trust that they are keeping that in their bank account.
Fan.
Listen, I talked about this for many, many years, probably 10 years now, when broker said, hey, you're protected. We've got payments up front. It's not a positive scenario to a lender because you're telling us up front the client can't afford to make the payments. So in the back of the mind is what happens at the end of the term? Is that client in the same financial situation? And now the lender has to make a decision. Do they keep them on board? Maybe they did pay very well, but what's their ability to continue paying?
My concern isn't the lender being protected. Of course you are. It's the psychology of the clients. If they've had 12 months where they've not had a mortgage payment, I promise you they're spending every penny that they earn on life.
It's behavior.
So they go from zero to all of a sudden they could have a $2,000 or $3,000 payment shock. Mm-hmm. That's a huge adjustment. It is. What service are we giving to them?
That's why I don't recommend a situation like that. Of course,
the exit strategy is selling or something, and it's short-term solution, maybe.
Right.
But long-term, what are we telling our clients? It's crazy to me.
To me, that's not protecting the client's best interest. And again, in an increasing equity environment, that worked because everyone used their house as a bank account and just kept refinancing a year later, 2 years later, and pulling more equity out to make payments and live off of their equity. And all of a sudden, the environment's shifted and that option's not there anymore.
Speaking of environment, where do you see the mortgage market going in the next 12 months?
I think we're going to be in the same situation we're in right now.
Okay.
When you listen to a lot of the economists out there, lowering rates are not going to fix the situation we're in right now. This comes down to, like everything else, consumer confidence, just general consumer behavior and how they handle their finances, and economics. Yeah. People are losing their jobs out there and people are scared. So a lot of people are on the sidelines, even those that have the resources. They're sitting on the sidelines.
You and I were fortunate to be at an event in Vancouver a couple of weeks ago, and I was shocked. There were 4 economists, and all 4 of them said that this is where we're staying with terms of rates. Similar. How do we change the client's opinion? Everybody thinks that we're going to go back to COVID rates. Those weren't normal. The rates that we're seeing now is what we saw pre-COVID. Those were extraordinary times.
Right? I always recommend, and we have the tools at hand, whether you jump on the association sites or just simply go on the internet and look at the historical charts and in comparison, and you'll see where rates should be for a 5-year fixed or a 3-year fixed or variable. And I think a lot of people just don't utilize those tools to show consumers that this is really reality at this point. So if you have the resources and you want to become a homeowner, and you're planning on staying in that home for a number of years, it's not a bad time.
But I think that whole staying in the home concept has changed in Canada. We were flipping houses. I don't think I've lived in a house for longer than 5 years. And my mortgage is coming up for renewal. My kids are going to university. So my husband and I were having a conversation now do we sell and, move closer to Burlington or whatnot? And I was like, no, we're here. It's not worth selling at this point.
I agree with you in that respect. Earlier on in my career, I moved around, made some career moves and obviously bought and sold homes. The current home we're in right now, 2011. And I said, that's it.
Yeah.
I'm happy where I am. There's stability for the kids, and I just want that for them. So am I going to go and move again? I honestly don't want to, unless I'm forced to. Do you refi or do you put a line of credit on to
I've got a reverse mortgage for you. Don't worry.
Yeah, there you go. I'm of age now, so I'm like.
That's awesome. Oh my goodness. Let's go back to neighborhood. What types of clients or deals do you guys really like to see over there?
We're focused strictly on residential first and seconds from a client profile. So if you think of our space, the MIC private space, whatever you want to call it these days, we like to call it alternative lending. I would say it's generally the same as all your alt lenders: self-employed, multiple sources of income, new to Canada, foreign income.
You accept foreign income?
We do.
Amazing.
As long as it's not from a sanctioned country, we can consider it. That is the general profile. Would we have to
disclose that to you? If you don't actually ask for income? I mean, in your notes, we should, but
we still, and this is where, you talk about mitigating risk. That's where we still want to see a full application with all sources of income documented, because again, it comes back to you're making the underwriter's life easier,
of course,
to help you get an approval. I'll give you an example, a real life potential example. Someone that's self-employed, they have a foreign income, they're running a business overseas, or foreign pension. They have rental income, government assistance like child tax support, contributory income into the household. People that live there not on title.
That's so common now.
It is very common. And, tell us about all of that, because that's tangible.
For sure. I'm sad that a lot of our B lender friends have gone away from contributory income because that's the reality. You've got $1 million townhouse. You need as much as you can get, right?
How many people are living in homes now?
Right.
You know, I had this discussion with someone the other day. You know, we started talking about generational homes. Do we foresee something like this in developers creating this type of home, whether it's a duplex or just large homes with multiple?
But where are the developers going to create these homes? There's no property.
Well, but that was the question, because when you start talking price points that we're talking about here, you need multiple sources of income.
Yes.
To be able to afford something like this.
But it's not just that. Going to the generational homes, you've got people having children older in life.
And they're still at home.
Right? So they need to buy these houses, and then they want the grandparents to live there for childcare, right? It's an affordability. It's almost a necessity.
Yeah.
One of the things that I took away from the Vancouver conference was the stat, I can't remember what it was, but it said that if your parents don't own a home, there's a good chance that you're not going to own a home.
Correct.
That made my heart so sad.
It's pretty realistic when you think about it. And it's no different than, you know, someone relying on social services for most of their life. They're being brought up in that environment. They're not being exposed to anything else.
Yeah.
All right. And figuring out, is there another way? You know, we talk about, we have children. I've been talking to my boys about this stuff since they were probably 6 and 10 years old.
I think my daughter knows more about mortgages than the average mortgage agent.
But you look at, you know, that education, we're in the business, so it's easy for us to speak to. I didn't have that from my parents. They didn't grow up with that. It was a totally different generation. I was fortunate to be in the industry and start understanding what that all meant and how to go about it. So educating the kids on how do they go about it, how do they achieve something like this. If people aren't exposed to it, it's a really difficult thing.
But even when you're looking at, you know, coming up with a down payment on top of all of the other things, when a kid is paying, and I say a kid because like I'm old now, but when they're paying $3,000 in rent, which is not unrealistic in this market in the GTA, how are they expected to save $40,000 and $50,000?
Down payment's the toughest thing to get to. And
parents now, like you said earlier, we're using our equity in our home as a bank machine. So when we saw the decrease in housing, I mean, a lot of people refinanced during COVID because all of a sudden their house was double what it was worth. And now when they thought it was 60 or 70% loan to value, now we're at 90% and now we're stuck. So parents aren't able to tap into their equity in many cases anymore.
Not the same way. No. And that's where it will be a number of years before we come back around to that.
You think we will come back?
Not anytime soon.
No, like a decade maybe? I figure about a decade.
Listen, when I bought my first house, it was 98.
You're aging yourself.
Yeah, I know. It was a townhome for like $110,000.
Right.
But you know, when I think back to that,
I don't even think you can get a parking spot for $1,000 these days.
But I looked at our street when I bought, and there were a lot of original owners on that street that bought in 89, 90, 91, which that was the big bubble again back then. And so they bought at the height. They were in it for 9 to 10 years. So when we bought, they were still digging out. Yeah. And their value was fairly close to their mortgage amount. At that point, it was a slow burn for them.
But I think the mindset was different back then. I think when we're dealing with people buying houses in the 80s, the goal was to buy a house and not have a mortgage.
Correct.
And I think what's changed or what shifted with COVID is now we're here for a good time, not a long time.
Yeah. And
I've had so many conversations with people that say that I want to die with not a dollar to my name.
And they don't care.
They don't care.
You're absolutely right. When you look at where mortgage rates are or were, and even where they are today, in the 4s, approximately, high 3s, and you look at the mentality of why would I pay off and stress myself to pay that off in 5 years, 10, 15, when I can take the same amount of money and put it in the market somewhere and realistically gain 10%
Yes.
somewhere. That's the trade-off. And I think the younger generations really caught on to that.
Because they have to make as much money as they can, because life is different.
They have to. Life is very different. I did this. When my dad was alive, we're sitting at the dinner table with the boys, and I really wanted to illustrate something to my boys. I had them tell them what they'd bought, this 3-bedroom back split that my mom still lives in, and what they bought it for, and what his salary was.
Yeah.
And he was an electrician at Faisal, retired, and back then, it was $90,000 income on a purchase price of $125,000.
Wow.
For a 3-bedroom back split.
But in the 80s, $90,000 is like $250,000 today.
It's a lot. But that's what so when you compare this, fast forward to where income levels are today and housing prices.
Yeah.
It's crazy when you think about it.
It's realistic to think you can pay off $125,000 over 30 years. $1 million?
It's going to take some time.
It's not possible.
And that's why a lot of people aren't.
I don't care.
They look at it and say, that is not a focus for me. I will continue making my mortgage payments on time.
100%. And they're smart about it.
Yeah, I need a roof over my head. But at the same time, I want a certain lifestyle.
Yeah.
And when you look at that, that's why, people are looking at all sorts of different types of financing.
Well, our conversations are different with our clients now. It's, good people have gone from the A space to the alternative space, not because they don't pay their bills, not because they can't afford it, but because of the stress test and all of the government intervention. What is your average Beacon score?
Over 700.
Right?
We're dealing with people that pay their bills. And when you rewind 20 years ago, 25 years ago in what we do, that wasn't necessarily the case.
Well, you were seeing 500 Beacon scores 10 years ago.
Absolutely.
700 Beacon scores now, which, I don't want to get political, but let's get political. Like, the government is hurting us because they can pay it. They make great money, but the stress test is putting everybody over the limits, and the way some lenders calculate penalties.
Do you think it's a stress test? I think it was more along the lines of taxation and the government wanting and needing to force people to make a choice on, if you want an A rate, you need to report a certain income level to qualify, and if you do that, you have to pay a certain level of income tax.
Yes.
There's a trade-off there. So they're after that bucket.
And we're supposed to be excited because the government dropped the lowest tax bracket.
But that doesn't impact
impact the people buying houses. It doesn't, right? And I said this when I was talking to another lender. I went into a dealership this year. I bought 2 new cars. They didn't ask for anything.
No.
So I can spend $100,000 on a vehicle with nothing, but I can't get a mortgage. Are you seeing at Neighbourhood, refinances to pay out car loans?
A number of different things.
Right?
I see car loans with payments from $500 to $1,000.
Bi-weekly.
Like $800.
Bi-weekly.
And that's the thing. Some of these are bi-weekly payments that are quoted. Listen, at the end of the day, everyone needs transportation to some level. I think people go a little overboard with that, and don't really manage their finances properly.
Well, I think we're so busy comparing ourselves to the wonderful things that we see on social media, to our neighbors. I'm guilty of buying things that maybe I couldn't have because my friend had one. Let's be real. If you could wave a magic wand and fix one common issue with broker submitted files, what would it be?
I would say, do not veer away from your best practices. And what I mean by that, you spoke to this. If you're prepping an application for an A lender, you're going to provide them with certain volume of information. And there's an expectation of documentation on that level. Now you're dealing with an alt lender. Do not veer away. Don't omit anything on the application. Makes decisions much quicker. and the right decisions as well.
It's also protecting the agent. So I have the pleasure of teaching for MPC. Right. And when I teach all of my agents and majorly level 2 agents, I tell them, like, notes are everything. You can't just say, I got this file, ratios were out of line, I went to Neighbourhood. You have to explain why it wouldn't fit with an A lender or a B lender before you. And a common thing that I hear from my alternate friends is that deal, I get submitted deals all the time that could have gone to the B space.
Yes.
But because the agent doesn't do their due diligence or understand lenders' products,
it's the understanding piece,
right? It's the path of least resistance. Well, that's no bueno when we're talking about FSRA and suitability, right?
Listen, and I've said it before. Speed does not always equate to the best deal or the most suitable file for your client. It doesn't.
I mean, if you want to be a transactional broker, then sure.
Sure. And there are many of them that are out there. But those are the calls that I get every single day from a broker saying, Reaza, I've got this client. This is their situation. They don't want to go back to this lender. I didn't place them there a year ago. So that, I saw that trend happening 5-6 years ago. And it got me thinking, it's like, okay, so the original broker is losing their client now completely. They're not even getting a second chance to deal with this consumer.
We don't talk to our clients once they close.
Yeah. But if you're putting them in the right thing in the first place, they're going to want to speak with you because they're comfortable with what you've given them. And to your point, you're following up with them throughout the process. That is a huge downfall in this industry for most agents.
I think if you take the time to create an exit strategy with your clients, and what I mean by that is you don't tell your client what to do.
You work with them.
Make suggestions so that the clients believe that it's their idea.
Exactly.
Because if they're part of the building process, chances are they're going to be more successful on the other side, right?
They have to buy into it.
Right? And if anybody tells me what to do, Reaza, I'm not doing it. I don't care if you're right or you're wrong. You can't tell me. But if you make a suggestion and I think it's a great idea, I'm going to take it on as my own and I'm going to do it, right? And I think our clients are the same way. So the brokers that don't take the time to make sure the client's in the right space are the ones that are losing them. Because we're not supposed to keep them with you. We're supposed to take them somewhere else. So
we're not that lender that wants to continually renew for 5+ years. That is not the best situation for your consumer.
But it's not the best situation for the lender either.
Or for us, because we need that capital back to continue rolling out.
And I say that all the time, and correct me if I'm wrong, you guys invest, you guys have investors.
We do.
And you lend out their money. So there's obviously the lender fees and all of that stuff, which is a big component of what they earn. If we just constantly renew them for $500 at the end of the term, the investor's not making as much money as they could. So your goal is to cycle it as much as possible so that everybody makes as much money as possible.
Exactly. Yeah.
So
at a reasonable cost to the consumer.
Right? Like, I'm not saying that you're not unreasonable.
No. But you have
investors, but you have investors with targets and goals, and the investors have expectations, which is fair.
And we promise a certain rate of return to keep those investors on board.
Yes.
So that's where it all has to work together. I'll ask you this question. How many times have you sat down and drawn out a plan with your consumer to then find out all the other stuff financially that they are dealing with? Because there are a lot of hidden costs that an application does not expose.
Yes.
So when you start digging a little bit deeper, you have lifestyle costs.
100%.
And to your point, when you're sitting down and drawing out a plan with your consumer, we may be talking about what we see on the credit bureau, but do they drink, smoke, gamble?
But you see that information.
All of these vices.
But you see that when you get their bank statements, right?
You can.
And
a
good broker who is collecting all of the information to come up with a strategy and a plan for their client is going to have bank statements. And we're not going to judge the client.
That's where you start.
Right? I'm not going to judge the client. I don't care where you spend your money. But let's have an honest conversation. Just because you qualify for $800,000, your lifestyle doesn't allow for that. So what are you willing to sacrifice to get where you want to go?
And they have to be comfortable with whatever that decision is to put them in a better financial position.
But they have to decide that themselves.
They have to, yeah.
Right? Like when I'm dealing with a lot of first-time home buyers, they'll come to me for pre-approvals and we'll say, okay, so I'll be like, tell me what you do. What does your weekend look like?
Yeah.
Do you go for dinner?
That's a great question,
right?
too.
They'll be like, yeah, we go for dinner every Saturday night. Awesome. What does that cost you? $150. I'm like, just once a week? Well, no, usually during the week we'll get takeout or Uber Eats or whatever. I'm like, okay. How much, like, do you go shopping? Do you like to travel? Like, what does that look like? And then they'll tell me all of the things. Yeah. And then I'll be like, okay, so you were pre-approved for 800. If we keep this the way it's at, you really should be looking at a house around 600,000. Right. Well, I can't buy anything for 600,000. Okay, then what are you willing to trade? To trade, that's right. Because we can't use the word sacrifice. No. Right? So you want 800, you qualify for 800, but some things are going to have to change. And, But that's a behavioral cost. But that's where brokers are falling short, in my opinion. No, they are. Because, again, the training in our industry is lacking, but it's only focused on one area. Yeah. How do you qualify a client? And that's it. Yep. And that's not enough. I say, the new agent courses and all of those things are wonderful. It's not enough. You have to go beyond that. Like you get your license and now what? Mm-hmm. Like that's the problem in this space. You do have to go beyond that to run a proper business and build a loyal clientele. You have to. But in my opinion, in this industry, that's where we fall short. We bring people into this industry, explain that Reaza, I lived in a car. I didn't go to university and I'm here. Yeah. So the possibilities are endless, right? But I had people, no ceiling. Right? I had people that were willing to show up. But now there's not a lot of people willing to show up because time is money. 5 years ago, if you had a license, you had a license to print money. Now, absolutely, agents are 6 months to a year before they get their first deal. It's craft dinner, hot dogs or steak. Like, listen, it's when you're starting out, and especially if you're starting with no database, and we all have centers of influence. There are ways to get started. Children are the best. Yeah, their generation. They're ready to go. It's not just that. You just show up with mommy and me with logoed stuff, and all of a sudden you're... I know, right? But the reality is, this is a 3 to 5 year process to really solidify yourself in the business. And I would even argue sometimes, because last time I brokered was 2008, 2009. And the internet was Facebook was fairly new. We were experimenting with all of that stuff. And honestly, it was almost a year lag time before we started to see real results. Nowadays, you can see results almost instantly. Yes. I remember I got my license in 2008 and I didn't think that email was going to be a thing. Yeah, exactly. So I have like 400 clients that I have no email addresses for. I mean, I wish if I only knew then what I know now. But when you think about that, it's the tools are available today. You're coming out of, in most cases, a corporate setting, 9-to-5 job, 5 days a week. If you simply applied that work ethic to this space, 9 to 5, 5 days a week, have your weekends, but that 9 to 5 being super focused and effective, there's zero reason why you cannot be successful. On the other side, with newer agents, my biggest frustration is when somebody says, yeah, I'm checking out at 2 because I have a massage. Well, everyone talks about flexibility and being self-employed. And because you were in a box before and you were micromanaged, the freedom sometimes is great, but it hurts. It hurts so much, and they don't understand that. You still need the discipline. And that's a difficult thing, especially if you're working from home. You have an office here your agents can come into and be around people and hear the conversations. Which is the only reason I have an office. Yeah. Is because I'm not disciplined to work at home. Right. Not everyone is. Yeah. So the minute you can recognize that and then put yourself in an environment where you can have some structure and discipline. I did the same thing when I brokered. I had an office. I would go and sit at the desk with my laptop open, did my 9 to 5, and went home. Yeah.
And it's never 9 to 5. What we do is not 9 to 5.
It's not, but
the effort has to be in there.
At least for 3 to 5 years, so you can get yourself established and you start having repeat clients and referral business. Some of us make doctor money, lawyer money more. But the effort that we have is...
You put a lot of effort to get there.
Right. And I mean, I'm fortunate now that I don't work weekends unless I choose to.
Exactly.
I don't work evenings unless I choose to. And that was a hard mindset shift for me, because I used to think, oh my God, if somebody calls me and I don't answer the phone, they're going to call the next person in the yellow pages.
Exactly.
Right? So that's the mentality that I grew up. I started in 2008 during the recession in Hamilton,
right,
where lenders wouldn't lend between Wentworth and Parkdale, north of Ottawa or whatever, north of Barton or whatever that was, right?
Barton, that's right.
And I had a broker of record who would take a week or two to call me back. I had little kids. I literally would leave the house so my kids thought I was leaving, and then I would sneak back in and go into a room, and I would lock myself in a room in my house. For an entire year, I did this 9 to 5, Monday to Friday. Yeah. I didn't know what I was doing. I was creating postcards, anything that I could, and I was door knocking. Yeah. And I learned this business in alternative space. I didn't know what an A deal was. Every deal I did was hard.
That's what brokering used to be.
Right.
I always chuckle about this. The one person I spoke with, and they said, Reaza, back then we had 2 files for every client. We'd have a file for the bank at 70 or 75%, and then we'd have a private for 5 or 10%. Yeah. And that's how they acquired their home. That was brokering. You had to understand how to structure files. We're in that environment.
I'm so excited
We're back in that environment.
I'm so excited to be actually brokering again and creating strategies and putting things together, because it's not cookie cutter anymore.
When I hear someone says, oh, this is a slam dunk deal, I really, really try not to laugh, but I have to sometimes.
Don't count your commission until it closes.
Is a cookie cutter anymore. Right? Even on the A side, there's always a curveball that's thrown in with AML or FinTrack nowadays, and there's a heightened level of risk for sure. Talking
about new things, does Neighbourhood have anything exciting, any tools, anything coming out that you're excited about?
Well, we've revamped a couple products. So Fiskard had a great bridge financing product, a reno product as well. So we've taken those and revamped them under Neighbourhood. So with the bridge product, we don't require a firm sale on the existing property, and we can help the client close their new purchase. So that's something that's fairly unique out there.
I was going to say that is unique. I don't know anybody else that does that.
Yeah. So I always recommend to the agents, and when I speak about products, I always think about how can agents utilize that to market themselves and to their centers of influence primarily, and even their database. But how can they use these things to generate more business? Yeah. Real estate agents don't realize that you have access to some of this stuff. So utilize that and get marketing pieces out to them, speak to them. They really don't understand how that can work for them. And it actually can generate business for them.
As a BDM, is that your title? What is your actual title?
Just call me.
Okay. Will you do realtor presentations with agents if they called you?
We can. I've offered that before, just to speak specifically about these type of offerings. I did that for a buddy of mine with realtors in the room along with his agents. And the very next week, they generated business because the realtors had no understanding that this was something that was available.
They only know what they know.
Yeah, and they're trained a certain way, just like every other industry. They're trained to do what they do to make an income. Beyond that, the good ones go beyond that, but most don't. So they rely on people like yourself, the experts in the finance world, to say, this is how I can help your clients, and this is how we can generate some more business for you.
I have a lot of agents that reach out to me and say, Donna, I lost another deal to the bank. Mm-hmm. And I will stand on a soapbox every single day saying, first of all, stop selling rate. Second of all, let's talk to people that the bank can't help.
It's the first place to go to.
Right? If I'm talking to somebody that I know that the bank can't help, the only reason I'm going to lose them is because I do something wrong.
Exactly.
Right? And clients aren't loyal. We want to believe that they are. At the end of the day, many of them are chasing rate or anything. So it's our job to educate the clients.
And keep them.
Right? And, sometimes a 0.05% lower interest rate has 3 times the fees
But those are all the tangible things that the consumer is not aware of. And it's up to the professionals to point that out, especially if you're fighting for a file, whether it's half a point to 0.5%. Can you now point out all of those other factors that say, you know what, it's better to go with the solution I'm presenting?
do the math.
And do the math. If you can put things in black and white as a comparison to an educated consumer, and you can help them understand it. But at the end of the day, they're going to look at the bottom line number in most cases and realize, yeah, I think this is a better situation for me. But people don't spend enough time doing that.
No.
We actually have a tool on our site. It's a comparison tool, calculator, and it allows you to go through all our pricing options, whether it's charging, a 1% lender fee or no lender fee, and how long the client will stay with us, to illustrate what out of the 3 is the best financial option for the consumer.
So cool.
So you can utilize that right in front of the client when you're sitting down with them. And show them, yeah, you know what, this is why I'm going to recommend this option out of these 3 pricing illustrations. They may look at it and say, you know what, I want to go with the no lender fee option just because they don't want to pay a lender fee. Yeah. They're adverse to that.
Yep.
Or I want to go with the lowest rate.
Sometimes you need no lender fee, though, because of loan to value, right? There's just no money to lose with % or % and a half, right?
That's right.
Sometimes it's strategy.
And there's a trade-off there. Yeah. Again, and it goes with the length of time that they're going to stay with us. Yeah. So whether it's a year or 2 or within a year, it's going to affect that bottom line number.
At the end of the day, the investor's going to get what the investors promise. So if you don't want a 1% fee, your rate's going up by 1%. It's not rocket science. Mm-hmm. But sometimes it's necessary,
it makes sense.
Right? So there's a lot of mix in the space.
Too many.
Right?
In Ontario,
Why
especially.
should we choose Neighbourhood? What makes you better than all the rest? Other than you, of course.
Listen, we absolutely look out for the best interest of you, your business, and the consumer. So we always the focus really is making sure that your client is put in the best situation possible. We're not going to do a file just for the sake of doing it. If it does not make sense, we're going to have that discussion with you and try to figure out, like, what are we trying to achieve here? But I'll tell you right now, speed, we can handle rush closes.
What is a rush close for you?
If you ask our underwriting manager, 2 days, I said,
let's be real.
But it can be done. It's been done. There are some factors in that too. Appraisals.
All docs up front.
Up front. And that's how you operate. Not everyone does. But if it's there, we can turn it. We can turn it around. Absolutely. So that you have that great price points. I've heard it from so many brokers now.
Yeah, your rates are very competitive.
Yeah, and it's not just a matter of the actual rate, it's everything else. Whether it's a no lender fee option or simple 1% lender fee, when you look at the fee schedule itself, a renewal fee is a flat $295.
That's it?
That's it.
Wow. All right, so Neighbourhood has competitive rates, quick turnarounds. Mm-hmm. What else are you proud of? You'll lend to everywhere.
We have a pretty wide lending area. In Ontario specifically, it's from Windsor to Ottawa.
Yeah, but will I get 80% in Windsor?
I wish I could say that, but no. So our max LTV is 75
across everywhere.
No, it depends on location and property type. So
here in Burlington, I'd get 80.
75. I know you keep saying 80, but
why can't I have 80?
I know, right?
There's nowhere to go if you get 80.
Listen, in this environment that we're in today, and all predictions this year are saying we're probably going to go down another 5% in value.
You're not wrong.
So if we're doing 75 and next year it rolls around and nothing's paid down, potentially we're at 80. But those that are doing 80 and 85, there's no exit for the consumer.
No.
You have nowhere to take them. So the only other option for them is to renew, if that's available.
Which is not in anybody's best interest.
And this is where it comes back to the environment that we're in, understanding that and saying your client's probably going to be there for another year or two.
Okay, let's go into the lightning round.
Oh, so I have to think quick here.
Yes.
Is that what it is? Okay.
Coffee order.
Coffee. Well, you gave me a fantastic vanilla latte, so.
All right, fine, I'll take it. Fastest approval you've ever seen?
4 hours.
Funniest reason a deal couldn't proceed or had to be reworked?
Oh my gosh. Entertainment worker.
We have some OnlyFans clients here, yeah. Will you do those?
If it's a legitimate business.
Define legitimate, Reaza.
Paperwork.
Oh my goodness. If Neighbourhood had a theme song, what would it be?
Okay, I'm really bad with music songs. What are we? We're quick. I mean, I don't know. I don't know what would describe us best, really.
All right, next time come back with
Rocky.
That. Rocky? Okay, I like that
one
theme
of the Rocky
song.
theme songs.
One policy you changed instantly if you could. Like, a lot of people say stress test.
We don't deal with stress tests, though. That's the thing. I can't even think of a policy I'd like to change.
Well, that's good.
Seriously, I can't think of any.
That's fantastic. If you don't,
I can't. Okay, that my answer is I can't think of any right now.
That's awesome. If you weren't in lending, what career would you have chosen?
I wanted to be a professional baseball player.
Really?
I almost got there.
I didn't know that about you. That's pretty cool.
There you go. Something you didn't know.
All right. What's the wildest can you make an exception request you've ever heard?
Someone that was in jail.
Really?
Yes.
That's cool. How do they sign?
Visitation.
Behind glass. Well, I guess DocuSign they'll solve that problem.
That's right.
On a scale of 1 to absolutely not, how do you feel when someone calls you before checking out your product sheets or your website to see what you can do?
1 to absolutely not. I'm pretty flexible on that, so I'd say 1.
I mean, I've called you with some pretty stupid questions and you haven't laughed at me, so.
My philosophy is always, I'm here to help. So some people, I tell them, call me. So
that's fair.
Yeah.
If you could ban one type of deal from ever hitting your desk, what would it be?
Yeah, listen, okay, I'm going to say this. An A profile client.
Right?
Yeah.
Path of least resistance.
Yeah.
Which is worse, a deal with no story, a deal with no documents, or documents submitted 2 days before closing?
Oh, documents submitted 2 days before closing.
Right. What is one thing brokers think impress you, but doesn't?
Their relationship with their client is so good that we should just do the deal.
They're a good guy, they'll pay.
They're good. Exactly.
If lenders had a private group chat, what would everybody be complaining about today?
Fact, we do.
Oh, all right. So what are you complaining about in said group chat?
Brokers that don't present their files properly.
What is the funniest reason a broker has given you for why a deal absolutely has to close in 24 hours?
Because they're going on vacation.
You are not the first lender to say that to me. That's hilarious.
It happens all the time.
If you had to create a tagline for Neighbourhood, what would it be? Let
me think. I've got to think on this one. Tagline.
Let's
come back to that one.
What's the most dramatic reaction you've seen when you've quoted a rate?
That's too high.
Really?
Yeah.
Okay.
Believe it or not.
I actually think your rates are fair. If you could send one anonymous message to every broker in Canada, what would it be?
Smarten up.
Right? Do better. All right. If you had to create a new tagline for your company based on how brokers actually use your products, what would it be?
Our tagline for how they actually use our products?
I'm giving you a little rope here.
Okay, I'm gonna say what everyone else says. we're the best.
Okay, well, I mean, I think you're fair, and I think you're up there. That's for sure. Where can
But we're
brokers?
the best. Come on.
Where can brokers reach you to learn more about your products?
They can reach me by phone,
Which is
416-712-9680.
awesome.
Email,
Which is
Reaza.Ali@neighborhood.com. And messaging,
what about your website? Do you have one?
we do.
What's
so
your
it's
website?
neighborhood.com.
Awesome. Any final sweet spot wisdom for our our brokers listening today?
Just keep educating yourself. As they always say, the best continually educate themselves and improve. Look out for the best interest of your client.
I really
The
like
money will come.
I really liked what you said about discipline as well.
Yeah. If you want to succeed in this thing, you have to have discipline.
Yeah.
You have to.
Well, friends, that wraps up another episode of Mortgage Sweet Spot Lender Edition. A huge thank you to Reaza Ali from Neighbourhood for insight, the honesty, and lender side wisdom. If you enjoyed this episode, share it with a broker who needs a little sweet spot clarity in their life. Thanks so much for tuning in. We'll see you next time.